Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So here we are, 2/3 of 2020 is in the books. We just finished the month of August. The S&P and the NASDAQ have broken through all-time highs. The Dow's not quite there. It's about 1.5% off of its all-time high, but it's making progress. And the one big question I get in response to those kinds of things that we're seeing in the stock market right now is, why? Why is it happening? What's going on? And so I want to touch on that today. So basically, there's two things going on right now. One is, the stock market continues to climb, not because the current U.S. economy is amazing. I mean, we still have huge portions of the country that are under pretty severe restrictions and not allowed to do business as they might otherwise want to do it. So the markets can't be basing what they're doing on that. So there are two things that they are basing it on, in my opinion. So the first is what the Federal Reserve is doing. Now, the Federal Reserve is sort of inserting liquidity into our financial system, and I have a chart here that shows that. If you look at, there's a huge spike that came right as COVID-19 started to appear. And the Federal Reserve basically started buying up things from the banks, as well as some corporate debt and a whole bunch of other things. But the point there is that they're buying something. So this isn't the Federal Reserve like throwing money out and with no expectation of getting it back. They're really just using their authority to increase liquidity in the market to keep the economy from collapsing. So that's one thing that the markets are looking at, I believe, as sort of there's this buoying effect of the Federal Reserve, sort of trying to hold some things stable. But the second element is actually, I think, what the bigger a reason why the markets are continuing to go up, and that is that the federal government just continues to throw money at we the people, in order to try to offset the loss of income and spending power that we might have had people been back to work. And I have one quick chart that actually describes this. It shows three things. It shows the S&P 500. So you see that the markets just dropped like a rock as COVID was first starting to rear its ugly head. At the same time, you see that GDP fell. Now, we didn't actually get that data until long after it happened, but we see GDP fell. But at the same time, you see a one line going up, and that's the Federal Reserve. That's the Federal Reserve stepping in to try to increase liquidity in the market. And you notice that as the Federal Reserve started pumping liquidity into the markets, well, the stock market started to go up too. So what's not on this chart is again, this second item that I wanted to talk about, and that's federal spending. So, the CARES Act was passed, pretty quickly right after COVID came out, and it allocated all kinds of money for unemployment. It allocated money for loans to companies that had to be paid back, and then there's the Paycheck Protection Program loans that don't necessarily have to be paid back. We're talking over $3 trillion of money that's been sort of pumped into the economy. And so, the markets did, at least initially, react on that because, while GDP was falling, the federal government was promising to put huge amounts of that money back, and they've been doing it. So as we see all-time highs right now, really what we're seeing is, I believe, the market's anticipating the next big government spending program, and that is going to be anywhere from $1 trillion to $3 trillion. But the markets know it's going to be somewhere between those two numbers. It's not even like it's going to be zero, because the Republicans are talking about a $1.3 trillion spending program, in addition to the over $3 trillion that's already been spent. And the Democrats started off over $3 trillion. I believe they're somewhere over $2 trillion right now. And they're at a bit of an impasse, but what we know is that at some point they're gonna come to an agreement, and it's not going to be lower than $1 trillion, and it probably won't be over, the 2 trillion mark that the Democrats are asking for right now. So the long and short of it is that the markets are going up because the markets don't actually see that there's a lack of liquidity in the U.S. economy, that there's a lack of buying power. I mean, when you look at the money supply, and it's called the M2, the amount of money that's in the economy, go figure, right? As soon as the government was sending $1,200 checks to everybody, you see the money supply skyrocket. So these are the kinds of things that the markets are looking at. Now, there will be, sort of a day of reckoning. It's not going to come, next year or the year after, or maybe even in my personal lifetime. But all this money that the federal government is spending, if they spend another, call it $2 trillion on this next spending program, then since coronavirus, since February, March of this year, the federal government will have increased the national debt by over 25% in a single year. That's just shocking. And it's a thing that is going to be concerning. We're going to have to deal with it at some point in the future. But with interest rates being as low as they are, it's not really a problem for us because we can at least afford the interest payments on all this new debt without putting the government in jeopardy of any defaults for any time in the near future. So as you look at the stock markets, the stock markets aren't being unreasonable if you consider all the money that's being pumped into the economy from different sources. Maybe it's premature a little, but they're basically betting on the money that's being dumped into the economy. And isn't that what the markets are all about, is right? Trying to figure out what things will look like 6, 12 months from now so that you can be invested in the right things at the right time. Now, I covered quite a bit of information here. If anybody has any questions or would like some sort of a consultation where I go over their own personal investments or their financial affairs, I'm here 5 days a week, 10, 11 hours a day. I'm happy to help. But if not, I hope you enjoyed the video because that was your update. If you have any questions, you know how to reach me. So I'll be back again next week with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.